What's a lot of the thinking behind these bigger, funds and institutional sides of people getting short oil? Like, what's the rationality behind it? Obviously, price going lower, but to take on futures in that kind of capacity with that many shorts, I'm wondering if there's maybe something we don't know as to why it's happening.
I think that people are worried about the fact that you had those voluntary cuts from OPEC. So you know that they can bring those barrels back onto market because they brought they brought this on themselves. They brought the idea up in the June meeting and said, if the market is ripe for it, we'll start tapering those voluntary cuts. That's 2.1 million barrels starting in October. Now, since then, of course, oil prices have come down significantly, and they said, okay, well, that's pushed off till next year. So, which is not very surprising. But I think that put a lot of funds on alert and were like, well, I guess OPEC could just unleash again because they have the capacity to do so. And so when they do, I want to be prepared for it. Now I see the market going lower, and in the background of that, of course, we've had the China disaster kind of going on, what's been going on in that market. But really, the interesting thing about everybody using this China thing kind of as an excuse for the last 2 years on oil is that their natural gas and oil purchases are at all-time highs. Nothing's changed, but somehow this narrative has gotten ingrained in people. And so they're just saying, well, China market's terrible right now, manufacturing is down, sentiment's down, smelting is down. But in reality, at least as far as the energy market is concerned, their purchases are at all-time highs.